Hi, and welcome to today's video on investing in stocks, real estate, and other assets. As you probably know, investing is an important way to grow your wealth and secure your financial future. But with so many different types of assets to choose from, it can be overwhelming to know where to start. In this video, we'll explore the pros and cons of investing in stocks, real estate, and other assets, and provide some tips for getting started. One of the key reasons to invest in different types of assets is diversification. Diversification means spreading your investments across a variety of different assets, so that if one asset performs poorly, your overall portfolio is less likely to be affected. Diversification can help reduce your risk and increase your chances of long-term success. Let's start with stocks. Stocks, also known as shares or equities, represent ownership in a company. When you buy a stock, you're essentially buying a piece of that company. Stocks are bought and sold on stock exchanges, such as the New York Stock Exchange or the Nasdaq. One of the advantages of investing in stocks is the potential for high returns. Over the long term, stocks have historically provided higher returns than many other types of investments, such as bonds or cash. Stocks are also highly liquid, meaning you can easily buy and sell them on an exchange. Of course, there are risks associated with investing in stocks as well. The stock market can be volatile, meaning that prices can fluctuate rapidly in response to news or events. If you invest in individual stocks, there is also the risk that a particular company will perform poorly, resulting in losses for investors. To minimize your risks when investing in stocks, it's important to do your research and diversify your portfolio. That means investing in a variety of different stocks across different industries and sectors. You'll also want to be patient and take a long-term view, as the stock market can be unpredictable in the short term. Now let's move on to real estate. Real estate refers to property, such as land or buildings, that can be bought and sold for investment purposes. Real estate can provide income through rent, and can also appreciate in value over time. One of the advantages of investing in real estate is the potential for appreciation. Real estate values can increase over time, providing a return on your investment. Real estate can also provide income through rent, which can be a stable source of income. Additionally, real estate offers tax benefits, such as deductions for mortgage interest and property taxes. Of course, there are risks associated with investing in real estate as well. Real estate values can fluctuate based on market conditions, and there can be challenges associated with property management, such as finding tenants or dealing with maintenance issues. To minimize your risks when investing in real estate, it's important to understand the local market and have a solid investment plan. This includes researching the local housing market to determine whether it's a good time to buy, and having a clear plan for how you'll manage the property and generate income. It's also a good idea to partner with experienced professionals, such as a real estate agent or property manager, who can help guide you through the process. In addition to stocks and real estate, there are many other types of assets that investors can consider. These include commodities, such as gold or oil, bonds, which are loans made to companies or governments, and cryptocurrencies, such as Bitcoin or Ethereum. Each type of asset has its own unique features and risks. Commodities, for example, can be highly volatile and subject to price fluctuations based on global events. Bonds offer a fixed rate of return, but can also be subject to inflation risk. Cryptocurrencies are highly speculative and can be subject to extreme price swings. To invest in other types of assets, it's important to do your research and understand the risks and trends associated with each asset class. It's also important to diversify your portfolio and not put all your eggs in one basket. By investing in a variety of different asset classes, you can minimize your risk and maximize your chances of long-term success. In summary, investing in a variety of different assets is an important way to diversify your portfolio and manage your risk. Stocks offer the potential for high returns but can be volatile, while real estate can provide income and appreciation but can be subject to market fluctuations. Other types of assets, such as commodities, bonds, and cryptocurrencies, each have their own unique features and risks. By investing in a variety of different assets and staying disciplined in your approach, you can increase your chances of long-term financial success. Remember to always do your own research and seek professional advice before making any investment decisions. With a smart and diversified investment strategy, you can achieve your financial goals and secure your financial future. Thanks for watching.